Is Ferrari a buy or a sell? Let's get started with the model. This is a large cap company, 82 billion market cap. They're trading at $4.37 a share, and they have 187 million shares outstanding. Ferrari makes and sells luxury sports cars. It also sells limited edition supercars and one-off cars. It provides racing cars, spare parts, engines. They also do repair, maintenance, and restoration. In Italy, they operate a couple of Ferrari museums. They also have theme parks in Abu Dhabi and Spain. They were founded in 1947, headquartered in Maranello, Italy. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. Numbers look great. It grows from 600 million to nearly 1 billion. Every year it goes up. And for a car company, they have great margins. They convert 14% of their revenue into free cash flow. Net income is a profit or loss on the income statement. It's revenue minus expenses. That also goes up each year from 900 million to 1.5 billion. Solid margins as well, 22%. Revenue is the sales for the company, and that goes from 4.5 billion to 6.9 billion. Nice steady growth. They pay a small dividend, 0.58%, and they can cover that 2.1 times with their free cash flow. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows past year 4, that's 62 billion. We discounted those numbers back to today's weighted average cost of capital. We get a value of the company of $54 billion. We divide that by 187 million shares. And we get a calculated stock price of $291. They're trading at $4.37, so they're trading at a 50% premium. It's a sell according to the model. It seems like this stock is always overvalued because it trades at a pretty significant premium. They're totally different than most other car manufacturers. Most other car manufacturers like Ford, GM, even Tesla are really focused on scale, selling as many cars as possible. Their focus is on specialty cars. Like I said earlier, they even make one-off cars. Somebody may request a car specifically for them. Of course, it's going to cost a lot of money, but it's only one of them. There are 34 companies in the same industry as race, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. They don't spend much in CapEx, 568 million, because as I said earlier, they don't sell nearly as many cars as these other companies. Their debt-to-equity ratio is 0.9, which is worse than the median average. They do pay a dividend. Not many companies pay a dividend in this industry. Look at Stellantis, 12%. They generate 1 billion of free cash flow, about double the average. Ford is number 1 at 6.4 billion. They're the third largest in market cap, 82 billion. It's amazing that they're bigger than GM and Ford. That wasn't the case 10, 15 years ago. All their price multiples look bad because they trade at a premium. It's a status symbol to own their car. Much more so than these other companies, even more so than Tesla. They generate 7 billion of revenue, a lot less than the average, but they're still growing. Their 5-year annual revenue growth rate is 12%, better than the median average. If you put $10,000 into this company 10 years ago, you'd be killing it at $85,000 today. That's a 27% annual return. Actually, they were not even trading 10 years ago. They started trading in October 2015, so it's been trading a little over 9 years. So to summarize, I have them trading at a 50% premium, ranking 5 out of 10. It's a great company, although it always seems overvalued. Would I buy it short term? 3 out of 10. I'm not sure about short term, but long term I would definitely buy it 7 out of 10. They have really weak ratios, 2 out of 10. Financials look great, 7 out of 10. Every year their free cash flow and revenue goes up. Let's look at their third quarter presentation slides. You can see right here they're located in a commune of Maranello. This area is Maranello on a map. Here's the Ferrari Museum. It says that Museum Ferrari Maranello. And let's zoom out so you can see where it is in Italy. Maranello is located in the province of Modena, right here. Let's zoom out. Right next to Reggio Emilia. They have really good balsamic vinegars there. I went there, tasted some balsamic vinegars. And let's zoom out a little more. So you can see it's in the northern part of Italy. The southern part, the bottom of the boot, is right here, Palermo. Rome is central, and Modena is north. I spent most of my trip in Torino and Genoa, which are really close to France. Here's the border of France, right here. And Torino is south of Switzerland, also borders Monaco. Okay, let's go back to their presentation slides. All the numbers are in euros. Euros are pretty close to US dollars. 1 euro is 1.06 US dollars. They used to be much further apart. They're really close now. I think 2 years ago, they were even. 1 euro equaled 1 US dollars. So Q3 revenue, 1.6 billion euros, which is 1.7 billion US dollars. EBIT, earnings before interest and taxes, 470 million euros. Amazing margins for a vehicle manufacturer, 28.4%, with net profit of 375 million. They have orders well into 2026 with the 12-cylinder. As they say in Italy, 12 cilindri. Look at this beautiful skeleton. What a sweet ride. They shipped 2.2% less cars this quarter. This quarter, 3383. Last year, 3459. But revenue is higher because prices are going up. Revenue 1.6 billion, last year 1.5 billion. It went up exactly 100 million euro, up 6.5%. EBIT is up 10%, EPS up 14%, and free cash flow up 20%, 364 million euros, 301 million last year. 32% of their shipments are in the Americas. That's down 26 units from last year. 40% of their deliveries are in EMEA, Europe, Middle East, and Africa. That's up 28 units, 28 cars. APAC is 18%, up 36. China, Hong Kong, and Taiwan is 8%. That's down 114 units. A little less than half their cars are ICE, internal combustion engine. A little more than half are hybrid. So they're tilting the other way, more hybrid than ICE. Most of their sales are their range products. That's the 488, the Portofino, the A12, and the GT-C4. Icona is 2%. Special Series, these are the one-offs, that's 4%. Here's a breakdown of their revenue. 1.33 billion is cars and spare parts. Sponsorship, 145 million, and other is 69 million. That gets to 1.5 billion. That's last year. This year, 1.4 billion of cars and spare parts, 174 million sponsorship, 70 million other. They mentioned the increase in cars and spare parts. That's due to a richer product and country mix, as well as personalizations. And their margin went from 27% up to 28%. I bet you GM and Ford are in single digits. Here's their 2024 guidance. Revenue, 6.55 billion. EBIT, 1.8 billion, 27.5% margin. Here's the actual for 2023. EPS, 7.90, up $1 from last year, if they hit the target. Adjusted EBITDA, 2.5 billion, 38% margin. And free cash flow, 950 million. Here's a breakdown of their new model productions. New for 2025 is a 12-cylinder Spider. The new brand in 2024 was a 12-cylinder. 2023 had 3 new cars: Roma Spider, Puro Sangue, and the 296 GTS. Pretty much every year except for 2013, they come out with a new car or multiple new cars. Here is a special series or limited models. The new one for 2025 is the F80. Ferrari F80 is $3.1 million. Look how sick this car is. Here's another picture. I'd be scared to drive this car. You'd be a huge target. You get mugged or killed, I feel. Look at this thing. Unbelievable. Look at the wings, like the Back to the Future car. Here's a side-by-side view of units shipped. So EMEA is up, but Americas went down. But for the trailing 9 months, Americas is up over 100. It's just down in the third quarter. It's actually up in every category except China, Hong Kong, and Taiwan. That's actually down a lot. So the trailing 9 months last year is almost identical to this year. They have 3.1 billion of debt, 1.5 billion of cash. So net debt, which is debt minus cash, 1.6 billion. They also have a line of credit for 550 million. So they have 2.1 billion of liquidity to tap into. Here's when their debt matures. A lot of it is maturing next year, 1.1 billion. So they're going to have to refinance that debt, which they probably won't have much of a problem doing. Net debt over adjusted EBITDA. If it's above 1, that means you have more debt than EBITDA. It was above 1 in the past, but now it's much better. It's 0.6. So a little over half a year of EBITDA to pay off all their debt. So if they wanted to get rid of all their debt, they can do it in under a year if they used all their cash and a little over half a year of EBITDA. Since they do manufacturing, they spend in CapEx $250 million in the third quarter of 2024. R&D 128 million, Here's a breakdown of their EBITDA, 1.6 billion of net revenue. Cost of revenue, almost exactly half of that. Then you have selling, general, and administrative expenses. These are all the expenses not directly tied to making the product. R&D, 200 million. So their EBIT, 467 million. Pre-tax income, 466 million. Taxes, 91 million. 19.5% effective tax rate, so net profit, 375 million. EPS, 208. Here's how they calculate the EPS. Net profit, 374 million. 180 million of shares outstanding, so 374 over 180, that comes out to 208. Last year they had 181 million shares, so they're buying back some stock. Operating cash flow looks good, 587 million. It was 481 million last year. 249 million of capex, so free cash flow 338 million. Their debt has been increasing. It was 2.6 billion in 2021, now it's 3.1 billion. But their cash has been increasing as well, from 1.3 billion to 1.5 billion. Let's look at the stock on Simply Wall Street. Its last price, $440, 78 billion market cap. Down a little bit in the past week, up 25% in the past year. It started trading in the US in 2015 at $50 a share. For the first year or so, it didn't do that great. Its low point was 36 in 2016, and then it ran up to 275 in 2021, then fell below 200 at the end of 2022. Ever since then, it's done amazing. It more than doubled from below 200 to almost 500. Its peak was 500 in August of this year. Simply Wall Street says the stock is only worth $91, 380% overvalued. 14 analysts priced this stock at $496. Here's their revenue since 2013. It was 2.3 billion euros. And it's gone up every year, except in 2020 it came down. It was 3.3 billion in 2020. It nearly doubled since then, 6.5 billion. They didn't have much debt in 2013. They started adding debt in 2016. It was up to 2.5 billion. And then it's been going up and down. But now their debt is almost at its peak, close to 3 billion. And their equity is all over the place. It was negative in 2015. But now their equity is higher than their debt. So they have a decent debt to equity ratio. And they have a lot of cash on their balance sheet, 1.5 billion of cash. Plenty to service the debt. They pay an annual dividend. It's not too high. The highest yield was 1.1%, and it's currently at 0.6%. The forecast for 2026 is 0.8%. The CEO's salary went from $500,000 to 1.5 million. Total compensation, 6.7 million. Tenure as CEO, 3 years. In the past year, a couple insider sells, one buy, all by the same person. If you sum the two sells, it almost equals the buy. 36% of the company is owned by institutions, 27% by the general public, 25% by private companies, 10% by insiders, and 1.5% by the government. The Agnelli family is the biggest shareholder. They own 1/4 of the company. Giovanni Agnelli founded the Italian car company Fiat, but he died a long time ago in 1945. The son of Enzo Ferrari, the founder, owns 10.5% of the company. And their employee count goes up each year from 2,900 in 2014 to 5,300 currently. And the ticker trades on the New York Stock Exchange, Xetra, Deutsche Börse, Swiss, London Stock Exchange, Borsa Italiana, BATS Europe, Mexican Bolsa, Wiener Börse, Bulgaria, Buenos Aires, and the Stock Exchange of Thailand. If you want to learn how to build your own DCF model, I show you in Excel how to do it. Click on the video in the top right corner.